Hello, this is Brandon. Today is May 8th, 2024. It's about 1 p.m. as I bring you this post-earnings wrap-up on Affirm, AFRM, because a lot of people are asking me about this, and I want to make sure that I give my sense, and so that you can kind of prepare for this. This stock really had a big reversal after reporting decent earnings, and I warned you about movements like this. In my previous videos, we talked about how Affirm and Upstart is going to be continual barometer in this sector as well as the industry's views of consumer spending habits and how the market views it. Okay, so we're going to do the post earnings technical analysis really quickly. And so that I want to prevent you guys from shorting this whole and what to do next. Again, you need to do your own research and figure it out on your own. But hopefully, this will kind of give you some things to think about. But there is more meat on this bone. So here's the disclaimer. Let's move forward. Okay. So we previously, like I said, discussed that Affirm and Upstart earnings will continue to gauge the health of the consumer segment. Okay, so that is same thing as what we're looking for on Airbnb, Disney, any of these consumer discretionaries, and on these marginal financial technology companies that basically helps to break up payments into two or provides marginal financing for online retailers. So this is from IBD, and we talked about this briefly, but a firm's earning tops view with above guidance. I mean, what more can they do other than it was already priced in, it's a sell the news, but a firm stock reverses down. And you want to ask how much further down? And this is, top to bottom, they're doing great because consumers are tapped and they're looking at these alternative financing vehicle companies to help purchase their financing. But one thing that people need to understand that people are beginning to use Affirm for more of the essential items and breaking it up into payments and pay later type of situations. Okay, so what is Affirm doing right now as we speak? So this is the daily chart of the Affirm. And one thing that I want to point out to everybody is that this has a ascending megaphone type of pattern. So this is fairly bearish, okay? However, we have this down ascending kind of the trend line from this area, which is going to be a pretty decent support. Let it bounce and let it work itself out. I don't think it's going to just fall apart right away. Just like in these areas, every time it had these big type of situations, it eventually bounced and then moved down. And so give it a few days. I think it's very important to let this IV die down, let the hype die down, let people forget about this because the thing that excites me about this stock is that there is gap all the way down to 17. I think this can go down all the way back into like 11 to $12 range, but that's going to take some time. So I'll spend more time on this and do a more thorough follow-up. What I do want to caution against for people is to short this hole right now because it does look bearish, okay? And there is a high IV amounts in there, and it's very enticing to buy this Friday's expiration. But if you're going to do it, use small pilot positions and then basically scale into these positions. And that's kind of what we're going to do for those people that missed this trade. Okay. So the sell the news scenario on otherwise good earnings and another indication of the market weakness and sector weakness. Okay. The banks and the people at Wall Street already know what's coming, which is demand destruction from the consumers. And we've already seen it. And we're going to probably see it with Airbnb after we close. Okay. So any good news is they're being sold into. That is a very bearish development for the markets at the moment. So it's the same thing that I've been talking about all the time, right? Tapped out consumers will less likely afford luxury spends, and default rates on these fintechs like Affirm and Upstart will continue to rise. And the insiders are dumping also. They know this. Okay, we know that we're going into a recession, even though the Fed hasn't come out and flat out said it. It may be stagflation because of the rising inflation, and maybe worse. I'm not sure. But that's another topic for another day. So summarize, a firm's bearish reversal is an ill omen. There will be continuation, but there will also be a better entry point. You need to buy more time on this, and you need to let that IV percentage die down a little bit. I mean, it's paying for 105% on these things are ridiculous. Ascending megaphone pattern on the daily, major gaps are below, can easily reach 28 to 25 price target within the next few weeks. There is negative momentum forming on the sector, and insiders are selling at a healthy clip, okay? And all of these we talked about. Patience and more meat on this bone, folks. Don't short the hole. Patience is key. So, please like us, share us, and above all, comment, good and bad. Thank you, and get some alpha here, okay? And please subscribe. All right, thank you. Bye-bye.